pumping sunshine, or if you want to be fancy, investment. And these days in Asia, it's hard not to be enamored with the bright sunshine radiating from China, with its strong domestic market and increasingly wealthy population. For Malaysia in particular, the summer shine seems almost eternal. Much has already been said about the amount of Chinese investment in the country, but it's hard to not be awed by the numbers. Beijing has vowed to invest up to 150 billion USD in Malaysia, almost half of our 2016 GDP. Since November last year, we have inked agreements with China worth almost 175 billion USD in areas ranging from construction to ports. And let's not forget the investors, Geely in Proton, Jack Ma, the DFTZ, and Bandar Malaysia. I can go on, but I've made my point. It's no surprise then that some people are worried about the extent of China's influence on the country. And I'm here to tell you, we should be. But let me be clear, I'm not saying we shouldn't let China invest because of some racist ideology, but simply from an investment point of view. It is not a good thing to put all your eggs in one basket. My point is, we as a country shouldn't be beholden to just one power. It doesn't matter if it's China, the US, Facebook, or the Star Wars Rebel Alliance. And above all, we should look at the assets that we are selling off. Any economist will tell you that selling national utilities is a bad idea. I'm talking about firms that run a country's backbone like power, communications, and water. In cases like this, we must be assured that the government has an upper hand, because what happens if the relationship sours? What if suddenly there is a policy shift that we don't agree with? Australia had rejected bids from Hong Kong and mainland Chinese groups for control of a company that supplies electricity to Sydney. So do you really want to give all the power to one party to switch off your taps? Did none of you watch Mad Max Fury Road? Case in point, when China General Nuclear Power Corp bought 1MDB's 13 power assets for 2.3 billion USD. While it was a lifeline for the beleaguered state fund, I don't blame people for feeling antsy. The assets generate 3,112 megawatts of electricity in its Malaysian assets. That is 12.5% of our country's supply. But you know what's the ultimate kicker? Some say that China's investments into Malaysia may not even pay off. City Research points out that questions have been raised over the commercial viability and funding for those projects, which could have significant implications for Malaysia's economic growth and the ringgit. And CIMB Chairman Nazir Razak has also raised warning bells, urging the government to scrutinize all the Chinese-led deals, saying it's dangerous to be swayed because it looks big and sexy. Nazir was referring to the 55 billion ringgit ECRL in particular, one of the country's largest infrastructure projects. While it can be beneficial, its commercial viability is questionable. As Nazir puts it, is Malaysia getting it at the right price? But his brother, PM Najib, is unfazed by all these remarks. He says if you want to delay Malaysia's development, if you want Malaysia to fall behind, and if you don't want jobs to be created or levels of income to rise, then you go and campaign on that platform. He says he will never apologize for facilitating investment in Malaysia, as these are for the interests of Malaysians. But realistically too, China's investment well is not fathomless. Recent news points to Chinese authorities regulating overseas investments, which may make overseas investments harder for Chinese companies. Let's not forget what happened to Forest City. It closed all its sales galleries in China for its Malaysian housing project due to Beijing's crackdown on capital flight. So, who will be our sunshine supplier when the light goes out? Here is the truth. Sometimes it is not what we want or what we don't want. It's just the way things are. China is the world's second largest economy. The fact that we are going to be drawn into its orbit is almost inevitable. Plus, with America pulling out of the TPP and putting itself first, there is a severe lack of options when it comes to big investors. In fact, when TPP went south, Who do you think all its members turn to? China. But you should ultimately strike a balance. Here is where we should pressure the government to scrutinize all deals and make sure at the end of the day, we are well spread out enough that we are beholden to no one. And it shouldn't maybe always be on the cheapest price. It can be on expertise, trading relationships. There are so many metrics that we can go by, all of which should be made public. Transparency is the only way really to quell the dissenting voices. At the end of the day, there is a fine line between welcoming someone with open arms and letting them squat in your house. Balance. Let's never give someone else the power to turn off our taps, even if that someone is a Star Wars Rebel Alliance. Just saying.